So welcome to our first podcast. Hi, my name is Debra Jo Sheard, and I'm an independent mortgage broker with Expert Home Lending. We have here my son, Ricardo, who is also an independent mortgage broker with Expert, and our first guest, Mr. Ian Grodman.
Grodman, yes, thank you.
Who is an investor. And he's going to tell us a little bit about investments and how he is working with them and why investing, the type of funding that he receives, and then we will talk about how we can perhaps support him in his future projects.
That sounds great.
Ian, if you would like to tell us a little bit about yourself, and then
Sure.
we'll have some questions for you.
So my name is Ian Grodman, and I've been doing real estate investing now for about 5 years. I wear a lot of hats. I'm also an attorney and a mediator. I sit on the Essex County Tax Board as a tax commissioner. I'm involved in local politics. I have a podcast myself that's about politics. It's not about real estate investing.
Okay.
But I probably started doing this about 5 years ago. Real estate was something that I always was drawn to and interested in. And I saw a commercial on TV about getting involved in real estate investing and got involved in a program. That's where I met Rick and Kimmy.
Yep.
And I've been doing it ever since. And so I've done a lot of work in New Jersey. And right now I'm focusing on purchasing properties and rehabbing them for Section 8 housing in Birmingham, Alabama.
Okay. All right. Thank
That's
you.
the nutshell version, right?
I first met you in, I think we met in Orlando in 2019.
No, I wasn't in Orlando, but we started meeting, me and Kimmy started meeting each other a lot at the very beginning of the pandemic. Remember we had that day we didn't know if we could go out, and that's when we started spending time together.
Oh yeah, it was because the pandemic, they shut everything down on March 12th.
Everything was shut down, and you and me and Kimmy took a chance and went out and spent the afternoon together.
Yep, and we were in one of your first stomping grounds, Orange, New Jersey.
Orange, New Jersey. That's where my first multifamily house. I have a 2-family house on Nassau Street in Orange, and I still have that one.
Yeah. Oh my gosh, it was such a cute little house because it had it was like a small looking house, and it had this big American flag. I'll never forget it. And
so it was probably pink when you saw it. Now it's a dark blue. But
okay.
yeah. And we've had fully rented ever since we did the rehab. It took about probably close to 6 months, but since then it's been fully rented, and it's been great. It's been a great experience. I tell people, happy tenants make happy landlords, and I've had very happy tenants there. So
Absolutely.
Yeah.
So how when you get these investment properties and you say you're in Birmingham right now,
Right.
You're looking to refurbish them and then rent them out for folks for Section 8.
correct.
So I know with Section 8 they do the HUD does do their own interview process.
Yep.
But you as a landlord, do you get an opportunity to
Absolutely.
interview?
Yeah. We would always meet the tenants first. We would go through the same process that we would go through even if they weren't a Section 8 tenant. So they've been approved by Section 8. They're in the Section 8 program. They have a Section 8 voucher when they first come to us, but we will still do a background check to make sure that there is nothing that we're uncomfortable with in terms of the tenants. But with the Section 8 program is great. It's a fantastic program. It provides affordable housing for people. We've got a housing crisis going on in the country right now, as you both know.
Correct.
And so it provides opportunities for people to live in quality housing. It's a great program. Most people who are in the Section 8 program realize that they are fortunate to have that support.
Mm-hmm.
If they create any problems, some people think Section 8 tenants are bad tenants. Generally, they're not. One of the reasons being, if they do create any problems, they will no longer be in the Section 8 program.
Correct.
And so it's really a great program. So we work closely with the head of the Section 8 office in Birmingham, Alabama. We have a good relationship with him. He's happy with the work that we're doing, and every time we have a house completed and ready, he's got somebody that he sends to us right away.
Oh, fantastic.
Yeah.
That's fantastic. Okay.
We've got a couple of 4-bedroom houses, and those are very, very desirable.
Absolutely.
Right.
So you don't do just apartments or multifamilies. You do also single-family residences.
In Alabama, that's what we have been focusing on so far. We have a long-term goal of going into multi-family housing. I do have some multi-family properties here in New Jersey. I have the 2-family property that we talked about in Orange. I have what's actually zoned as a rooming house in South Orange, New Jersey, and we have
Right near your stomping ground.
that's right,
Oh,
right near
Seton
Seton
Hall.
Hall. Seton Hall students living there.
Okay.
We have 14 tenants in that one, and then we also own the building next door that we also rent to Seton Hall students. That is an 11-bedroom house
Oh, wow.
that we rent to 12 young men from Seton Hall University.
Okay.
So we'd like to get into, 4-unit apartment buildings in Birmingham at some
Right.
point in the near future, and then who knows down the line.
Right. Okay.
Oh wow! So sorry to get so much in a rabbit hole, but tell me a little bit about how you in your process with going to Alabama, and can you just elaborate how you built that relationship with the people at that handle the Section 8?
Sure.
Well, before you get there, before you build a relation, why Alabama?
Right.
What drew you to that?
That's a good question. And you guys are probably a little familiar with this. Maybe some of your listeners might not be, but I started doing this in my home state of New Jersey, and it's gotten more and more difficult because of what is going on with real estate in New Jersey to find good deals, right? You've got to find
Yes.
an undervalued property in order to make it work. That's become more and more difficult to do in New Jersey. It's very difficult to find in New Jersey now, a fixer-upper for less than $500,000.
Yes.
Yeah.
And so a lot of
Unfortunately, yes.
people, So a lot of people said, you need to look in another market. And I said, I'm scared to go to another market. It's far away. I can't be there all the time to check what's going on. So I started looking at a couple of different places that people had talked about: Akron, Ohio; Savannah, Georgia; Birmingham, Alabama. And I made a connection online through Facebook with somebody who was involved with working with real estate investors in Birmingham. And when I went to explore Birmingham as a possibility, we sat down, we spent some time together. We spent the whole 3 days together, looking at properties and kind of getting a feel for what was going on there. We developed a really good relationship. His name is Will Floyd. He'll be listening to this at some point. And shortly after that, we started a company called Shine on Birmingham. We're very vested in helping to improve not only houses, but neighborhoods in Birmingham, close to the downtown area. And so we call the company, the business, Shine on Birmingham, right? Because we want to put a shine on Birmingham to show people what a great place this is to be. So we welcome working with other out-of-state investors who want to work with us as partners or private money lending partners. And so that's kind of where we're making the big push right now.
So when you decided to select Birmingham, Alabama as this place as far as finding and rehabbing residents for folks who needed a place to stay, did you have to contact with the mayor of the city, or is it
We didn't have any
housing authority, or how is that?
Yeah, we didn't have any relations or reaching out to political leaders. And I'm involved in politics here in New Jersey, but I should have thought of that, and I never did. We actually thought that Section 8 was a good way for us to do the projects that we wanted to do. And so we just reached out to the HUD office in Birmingham. We were fortunate in that there was a brand new person running the office the day that we made the appointment to go in there and see the office and speak with the people there. We just hit it off really well. Like, we were somewhat new at doing this. He was new in that office. He came from a smaller city in Alabama to Birmingham. And we just really hit it off, and we've been in touch on a regular basis ever since.
So do you have like a property manager who maintains these buildings?
My business partner is our property manager as well.
Oh, okay. So
Yep.
he goes down there from time to time, or?
He goes down there fairly often.
Okay.
He checks the properties out pretty often. Everybody who's living in these properties knows that they can reach out to him directly. He takes care of collecting the rent from Section 8 as well as the tenants, if the tenants pay a portion of their rent, which is the case sometimes. So he does all of that.
So what if there's some maintenance or something that they need?
He can do some maintenance.
From New Jersey, though?
No, he lives in Alabama.
Oh,
I'm
okay.
sorry.
That's why I was wondering who your partner was. Okay.
Yeah, no, he is
Okay.
he lives in Birmingham.
Got
He's from the South. He's from North Carolina. He's lived in Nashville. He moved to Birmingham with his girlfriend several years back. She was involved in real estate, and he started getting involved in real estate as well.
Oh, fantastic.
Yeah.
Fantastic.
Yeah.
So they probably able to help as far as finding.
They're really
recruiting.
great at helping to find
Yes.
everything.
Yeah.
I always tell people, it's very important to have a partner who wants to work as hard as you do to be successful, right? Everybody wants to be successful. Not everybody wants to work the same amount to get to that success. He is willing to do anything, and I can always count on him all the time. I'm very fortunate.
So if you were to tell new investors who are thinking about coming in and investing properties, as far as rehabbing, what would be some of the things that you would tell them to look for before making that decision?
I would say to get comfortable with getting uncomfortable. I think is probably the most important thing. For me, I've had my own business for 20 years, but I never had a business that involved literally, hundreds of thousands of dollars. And that was a little intimidating for me at first. And it still is sometimes. You've got to get comfortable with being uncomfortable and be willing to kind of put yourself out there for these large amounts of money. You really have to learn to understand a neighborhood. You need to understand the community that you're trying to work with. I personally believe that it's important to try to connect with the community on more than just a real estate level. One of the things that we want to do with these projects that we're working on in Birmingham is to create community gardens. We also want to put murals up, on the side of buildings in the communities that we're working in. Some projects that really help people who live in the neighborhood take pride in the neighborhood. We're really involved in that. You've got to find a really good contractor that you can rely on, who's going to be there every day and isn't going to disappear. Because any of us who have done this type of work knows that happens.
Yes, absolutely.
And just really, it's, again, in my opinion, everybody has their own way of doing things. I think relationships are the most important thing. Relationships first, and then the business is going to come from there.
Correct.
100%. 100%.
Yep.
And that's one of the first things we learned in our program when Fortune
Absolutely.
Builders.
Right.
Yep.
So,
What program was that?
Fortune Builders.
Yeah, you can mention.
Yeah.
We'll talk a little bit about that.
Yep. So
I'll let you lead off on that one, Rick.
where do I begin? So Fortune Builders, it's a great program. We first started there in Chicago, and they have different programs where they teach you basic things as far as how to negotiate a contract, how to negotiate a basic contract, how to write a contract, and also they have a special class as far as rehabbing,
Right.
what to look for, what to and how to number one, writing a scope of work, finding the right contractors, vetting the contractors, and making sure that when you do the scope of work, when you do the payment where you have the payment schedule, you only get paid if you complete this job. Then say it's okay, if you complete putting the drywall up, okay, I'll pay you this much. If you complete the bathroom, okay, I pay you this much. So kind of step by step on how to do different things, and making sure that you have everything down in writing. So with that, we had a class for just for private money lending. We had a class for rental properties, how to scout out tenants, or what market you want to go into as far as to do your business. So they had so many different classes, and they were all in different cities, but that's where I met
Yep.
You know, Ian.
That's it.
Particularly, well, wasn't mostly me. It was mostly my wife, because my wife was talking to everybody. You know how she is.
Yes, she's very good at talking to everybody. Yep.
Yep. So we first met in 2019, and we saw each other probably like 2-3 times in different boot camps. The last boot camp we were at together was in Baltimore.
That's right. That's right. That was right before the pandemic.
Right before the pandemic,
Yeah.
and we were going to go to Chicago together afterwards.
I don't know if I was planning to go to Chicago, but I remember like hanging out with you guys in Baltimore.
Yeah, we were going to go to Chicago, and then that's when the pandemic happened, and the pandemic happened in the middle of March, and we actually met up with each other on March 17th on St. Patrick's Day.
That's right. It was St. Patrick's Day, and we actually went into a bar and had a beer together. So we were the only ones there.
Yeah.
Yeah.
Yeah, but that's where we met. In Fortune Builders, you meet so many different people from different markets, and the great thing
All
about
over
that,
the country.
that's how you really learn your market. Like, you know, how to, you know, speak to different, like, you know, what's in this market. Like, I became friends with James Nave out in Indianapolis,
Yeah.
and we've really built a relationship out there. We have done a couple of. You know, we've joined together on a couple of his projects out there.
That's great. And now you both have 2 children too.
Yep.
Yeah.
But girl and boy,
That's
same
right.
combination.
That's right. Yeah.
So one of the things that I try to tell some of our first-time home buyers, and Ricardo can speak a little bit about that, is folks who purchase multifamilies. And I try to encourage first-time home buyers to look at getting a multifamily.
That's a great idea.
Only because when we write, or what we call originate the loan, we take in consideration the rental
The income, right.
that you will be receiving. So a lot of times that will more than likely qualify you for the mortgage. And yes, you will have a neighbor, but what I say to them, I said, now you're dipping into the investment
That's right.
field without having to do what we call a DSCR of 20 to 30%
Right.
down. So a lot more manageable.
Very smart move.
And you can even get an investment property, you know, to multifamily using an FHA loan, which requires only 3.5%. And we do have a couple of lenders that will provide the down payment assistance on multifamily up to 4 units.
Yeah.
So it's really profitable. But what I like to say to folks is, you can go into a multifamily, you can stay there, live there for just a year.
That's right.
And you can either sell it, or you can do what we call a cash out refinance.
Right.
Take that money, the equity that you have in the house, and now put it towards that single family home that you would like for your family. But I think most importantly is just talking about the whole generational wealth. You know, that is my focus. You know, I'm a former educator. And so after retiring 25 years, it's just, you know, how do you give back to your community, especially with young people now? So we talk about these folks that are in their 30s and their 40s. They're seeing this, you know, they're looking at the prices at home.
Very difficult.
In New Jersey, unfortunately, especially up here in North Jersey, starter home can be $1 million, which is crazy when you think about it, but it could be $1 million. So what do you say to these folks? And that's why I say to them, look at multifamily, even if it's just a duplex to get you started.
It's a smart move.
You know? And so we're doing that. So maybe Ricardo can talk about his last transaction.
This kid was 24 years old, just graduated from college. 24.
Wow.
And very ambitious young man, hardworking, just finished school. And he was like, I'm looking for a 3-family. I'm like, oh, okay, very ambitious young man. I wasn't thinking about this at 24 years old. So we were looking around for him, and he had a budget, but at the same time, it's like, you know, what I suspected, like, you know, because he was making good money, but like, you know, not only, you know, being a mortgage broker, we not only look at your credit, but your debt to income ratio. And as I knew, you know, because there are certain cities that you can find 3 families, but it's going to be 900, 1 million, 1.1. Right. So I was like, hey, listen, instead of looking for a 3-family, let's look for a 2-family. You know, you'll still make income that way. You know, so we found this one place in Jersey City, and And we got his and what people don't know is that on title you can have up to 4 people on title.
Mm-hmm.
You know, you can have 4 people. So we got him and both his parents, you know, on there. All 3 of them, and we got them a 2-family in Jersey City for $650,000.
650. Yeah.
That's great.
Only 3.5% down.
Wow.
3.5% down, and so when it was all said and done, including cash, everything, down payment, cash to close, everything, for a $650,000 house, he only had to come to the table for $34,000.
That's amazing. That's amazing. Good for him.
Yeah. So during the inspection, if I remember correctly, there was some issues with the roof where the roof needed to be replaced. And the buyer's realtor was able to negotiate that the seller picked up that cost. And that was about, what, $25,000, I believe?
Yeah.
That's
Usually,
a fantastic
yes.
realtor.
And usually with FHA, it is the buyer who, you know, when,
Right.
when you things need to be repaired,
Yep.
they're the ones who are responsible for covering that cost.
That was great negotiating for that buyer.
Yes, yes.
Good for you guys.
So he was able to, you know, the buyer's agent was able to do that. Ricardo was able to really bring down his costs for closing, because you might want to tell him what his closing cost was originally. Wasn't it about $12,000?
When we got to the end, and
I want to say it was like 2 days before closing.
2 days before closing, like the amount he had to bring in was $12,000. But then what was bringing to our favor? Oh, I left out a part of the story. Did I talk about we were able to get sellers concessions?
Yes.
Excellent.
Sellers concessions. What that means is the seller, like, you know, to help with the closing costs, can fund up under FHA guidelines. The seller can fund up to 6% of the prepaids and closing costs and everything. So
Of the purchase price.
so this guy's agent was able to negotiate 4%
Yes.
seller's concessions of the purchase price, which equated to about $26,000.
Wow.
Yeah, so this kind of worked into our favor because we were in a pickle, because it was like we were thinking, oh, I don't know if I can come up with the money. So when all of the seller's concessions used for all the prepaids that they could do, they call this S6 seller's concessions principal reduction. So which is just sitting there doing nothing. So I was like, okay, let's use this S6 seller's concessions to lower down the interest rate, which was already at 5.99%.
Beautiful.
Yeah.
So we got it all the way down to 5.866, and we got it from 12,000. The remaining cash to close 12,000 to 4,000.
That's amazing.
In 2 days before the closing. Yeah.
Sounds like a pretty amazing team you've got here, the two of you and this
Yeah.
realtor that you worked with on this deal.
Oh my gosh!
That
Yeah.
one, yes, that was
Yeah.
that one was a really good one. Yeah.
It was
we had-
literally down to the wire, and
Yes.
I didn't sleep that night, right?
No, I know.
Right, I'm sure you did. Yeah.
Yeah, that was.
I do my best thinking at 3:30 in the morning. Yeah.
Yeah.
Or my
yeah.
best
Yes.
worrying, I should say.
So, yeah,
Oh, yeah,
that's
definitely.
worrying.
Right.
Yes, yes. But I think what is so rewarding about the work that we do is at the end of the day, when you're coming to the closing table and they have that closing date. You went through underwriting. The underwriting. Now we've cleared all the conditions
Yep.
for folks, and now we'll say this is your date that you're going to be closed.
Here's your keys.
And here's, we're sending out the disclosure statements.
Yep.
So now they know this is what I need to bring
Yep.
to the table. And I think that's what's so satisfying to see that they're able to do that.
That's fantastic.
I think one of the biggest hurdles I have when I'm working with first-time home buyers, when people who've already purchased a house and now they've sold and now either they want to upgrade or downgrade, downsize, is that what the first time is getting over that sticker shock of their monthly mortgage,
Right.
Because they've gotten sort of comfortable paying whatever it is, the rental.
Mm-hmm.
So I had one situation. It was with a teacher. and making very good money. She's been in education 30 years, has her master's. So she was at six figures already.
Mm-hmm.
But she had been renting, and she did not want to pay more than her rent. Her
Right.
rent was only, I think it was just at $2,000.
Mm-hmm.
And I said, well, let's talk about that. I said, what is the size of your apartment? I think it was like 1,000 square feet, 1 bedroom, bath. I said, but you have no yard, nothing. This is it.
Yep.
And I said, you're telling me you want 3 bedrooms, you want 2 baths, you want a basement because you want to have some place for your nieces and nephews to play. So I said, okay, how much do you want to spend? She didn't want to spend more than $400,000.
Mm-hmm.
I said, well, this is, where do you want to live? Well, I want to stay in Montclair. I said, well, that's going to be a problem.
400,000 in Montclair would be very difficult.
I said, even if
Yeah.
even if we wanted to find a condo for you,
Right.
it's not going to happen because I have to take in consideration your HOA fees.
Right.
So she says,
And
so what
taxes
can
are
I
very high
do?
out there.
I said, well,
Very
what
high.
does it have to be Montclair? I said, do you want to live maybe by where you're working? No, she didn't want to work and live in the city that she teaches. Okay, I get this. Finally, I convinced her. She decided to look at East Orange.
Mm-hmm.
And which the realtor found her house for $400,000. She had $100,000 that she could put down in cash.
Fantastic.
So at the end of the day, we were able to get her mortgage at $200 more than what she was renting.
Wow. Good for you.
So
That's great
yes.
work.
So when you take them through the steps of, not so much as the pros and cons, but how, the big thing is the equity.
Right.
And I always save that at the end for them to talk
Right.
about. That I said, now you're not going to have equity on day one. You're not going to even have equity probably in a year.
Right.
I said, but you'll have something in a year.
Yep.
I said, but if you go in and let's say if you have a high interest rate, in a year we can go back and refinance it, what we call rate and term. We're just changing the rate and we're just changing the terms of your agreement.
Yep.
I said, but you'll have enough money in equity to
Right.
cover the closing costs.
Right.
And she said to me, where do I sign?
Beautiful.
So that's where
Good
she
work.
was able to see that.
I can tell you were an educator before.
Yeah.
Yeah.
So so those are those conversations I just like to have with people.
Yep.
Another thing I was telling my son, we're I'm looking at the New York City market. So we're looking at the 5 boroughs in New York City, and trying to get the message out about how much that they're paying in rent,
Right.
and that they have that rental board. I forgot what it's called, the name
Right.
of the rental board. But every year there's an
You're
increase.
going to get an increase, sure.
I said, so what I try to tell folks is that, yes, I said, you're going to have an increase every year. When you purchase your home or property, it's not. I said, the increase that you will see on a fixed rate. I said, now, if you're getting an adjustable rate mortgage, that's different. We'll have to talk about the terms on the
Right.
adjustment. I said, but with a fixed rate, the only thing you're going to see an increase is going to be in your property tax, perhaps, and maybe your homeowner's insurance. I'm not sure. That's something, but it's not going to be what's happening now,
Right.
where every year they're increasing, and there's not much you can do.
Right.
How many stories do we hear about folks that they go to renew their lease, and it's it's
The
increased
rent
by
dropped
$500.
dramatically. Right.
$500 is a lot of money.
That's right. And not every apartment in New York is covered by rent control. So,
Yeah.
right.
And there,
Not everyone.
No.
Oh, that's true.
No.
I forgot about that.
Yeah,
Yes.
there's a lot that are not covered by rent
Yes,
control,
yes.
and that's a free market opportunity for, you might see tremendous increases. That happened to a lot of people during the pandemic. They were able to get apartments at a lower
Yes.
rent because people were moving out of the
Out of the
city,
city.
and then when things cleared up, their rents were going up, 10, 20, 30, 40%.
Yeah. Crazy. Yeah. There's no control over that.
Yep.
So what we're trying to do is trying to get our friends in New York City
Very
to consider
good.
coming across the river,
Very
coming
good.
across the bridge. And yes, you're looking at Jersey City, Bayonne, maybe Weehawken, Elizabeth. And yes, the prices are high there.
Right.
However, if you're paying $3,000, $4,000 a month for a 1 bedroom
That's
or maybe
right.
even a studio,
That's it.
you can afford to live over here.
Absolutely.
Now, maybe you'll have to come in, maybe not, not Hudson County or Essex County, but maybe you'll have to come in to be maybe close to the Oranges,
Right.
because now they have the transportation, with the new train
It's
station
a
there.
fantastic commute into the city from there.
Yes.
And East Orange, the market. You mentioned your friend, who wanted to be in Montclair and went to the next town
Yes,
over. The
she was-
East Orange market has been crazy. She will have equity
Yes,
very soon.
yes. And what I saw, because what you're seeing now in New Jersey, and I think that's because we're so densely populated.
Right.
We don't have a lot of land mass.
We don't.
So what you see with developers right now is that they're building these townhouses and condos, but they are not selling them now
Right.
because the market isn't there.
Right.
But they know that they can make it on the rentals.
That's it.
Because if folks are still nervous about making that plunge
Yep.
into a purchase, and it's just trying to get folks to begin to understand you must take that risk, because we're becoming almost, I think, a nation of renters.
Right.
A few years ago, I saw something on 60 Minutes, a segment where I believe it was investors that were coming from Canada that was buying a lot of properties in the Sun Belt.
Mm-hmm.
So one of the states was Alabama. So it was like Alabama, Arkansas, Texas, and parts of Florida. And what they would do is they would come and just buy up all these single family homes, renovate them, and then turn around and rent them.
Mm-hmm.
And, for decent, not
Yeah.
a bad price.
Yeah.
But people get comfortable with that.
Right.
And I said, and then you're just going to be renters for the rest of your life.
Right.
And you have nothing to, if you wanted to pass on something to your children
Right.
or family,
Yep.
it's not there. And there's really no security, because you could have a landlord that perhaps sells that building
That's right.
or sells that house. Doesn't mean that they necessarily have to keep you on at the end of that lease.
Right.
You know.
And like you said, too, the whole idea of generational wealth, right?
Yes.
And creating generational wealth. By buying property, it gives you the opportunity to do that.
And it's a way of perhaps sort of that forced savings in a way, because it truly is passive income.
Right.
But looking at your return on investment. You hear a lot of people say, well, I don't want to be landlords, because they hear all the horror stories
Right.
about, tenants.
There are some. Yes. Yeah. Yeah.
But for the investors that I've talked to, I haven't really heard that,
Right.
as being problematic.
There are far fewer horror stories than I think success stories. And, we tend as human beings to focus on the negative, right? So we hear the horror stories more. There's a lot of good stories out there too.
Another thing was Ricardo and I were talking about when we were talking about investment properties now you do have the retail banks and ourselves as mortgage lenders, what we consider ourselves wholesale. Is we do that debt to service, using that tool, but we also do work with lenders who are in who just work with the private money, so that hard money lender.
Right.
So we do work with them too. So we do have that opportunity to present that as an option.
That's good.
to some of our lenders, because their requirements are not as strict
They're going to be lower, right?
as the DSCR.
Yep.
But unfortunately, that rate
It's going to be higher.
It's going to be higher.
Yes.
So that's
we know.
that's
Yeah.
a consideration. Then,
Sure.
that folks have. And another one I just learned about a couple of weeks ago, because we have a client right now who's looking at buying 20 units somewhere down in South Jersey, but they have like a called interest only.
Uh-huh.
So you're just paying the interest part. And I'm
Right.
like, why would I want to do that? But then when the lender, the hard money lender, was
Right.
explaining to them, he goes, you don't understand is they might decide to sell that in a year.
That's it. Right.
So why put all that money into it?
That's right.
I said, wow, what a strategy.
Yeah, it's a very good strategy, right? A lot of times multi-unit properties change hands fairly regularly.
Right.
Yeah.
And I said, wow, I learned something. I get, because, in the residential side, we look at the interest only, and it's really frowned upon, because when are you going to get to paying the principal?
That's it. it's different when it's your home and when it's an investment property, right?
Yes.
There's two different mindsets, you know, for how to approach it.
Yes. So getting comfortable with that.
Yeah.
Yes. Yes.
Getting comfortable with being uncomfortable.
Yes,
Yeah,
I like
yeah.
that. Being comfortable, being uncomfortable.
yeah.
Yes. Do you have anything else you wanted to add as far as wrapping that up?
Not that much. I mean, I'm just sitting here in awe, and I'm glad we have the friendship, and it's one of the reasons why we became friends. You know, just your genuineness, because there's a lot of, not here to name any names, but like just investors that are out there just to like, you know, just do investing, make money. But I feel like you just really care for the community and really want
I do. Yeah.
and just really want to just do good for the community, and it's just hear you further discuss that. I mean, that's something that, you know, I hope that that we could be a part of, you know.
Sure,
together,
absolutely.
you know?
I would
Yeah.
love it. I'd love it. Come
Yeah.
down to Birmingham with me on one of these trips, right?
Yeah.
Yeah.
Perhaps. Yeah. Yeah.
Yep. Yeah. Because Georgia. Yeah. Because I anticipate being down in Georgia because I'm licensed down there. So you have to take a flight in. From what I heard, you have to take a flight into Georgia to get into.
So actually, Birmingham, there are no direct flights from Newark Airport. Actually, there's starting next month. Spirit Airlines is going to start once a day a flight from Newark to Birmingham. So generally, when I go to Birmingham, I change in either Atlanta or Charlotte. One time I changed in Chicago.
Oh. You don't go out of Philadelphia or LaGuardia or JFK?
You know what? It's just so difficult to get there.
Oh,
and
yeah.
Usually I'll have my son drop me off at the
drop you off.
airport. He's not going to take me to LaGuardia or
Oh, that's true.
Philadelphia.
Yeah.
Newark Airport is 10 minutes from my house.
Yes,
so,
that's true.
So it makes sense. But I'm starting to lobby United Airlines now that Spirit Airlines has a nonstop flight to Birmingham. It's like, you know, the market is there. United Airlines, please start that Newark to Birmingham direct flight.
Yeah.
And there's a lot of times, you know, I actually, one time I flew to Birmingham, changed in Charlotte, and there were like 6 or 7 people from the plane from Newark to Charlotte who changed to the flight to Birmingham, and it's small planes to Birmingham.
Okay.
And I wrote to United Airlines and I said, you know, there were 6 people on this flight, you know, who going through Charlotte from Newark to get to Birmingham. You know, the market is there. So not to get sidetracked on like talking about how airlines work, but
No, it's interesting. In fact, I'm going to take United Airlines. I'm going to go to because one of the partners we do business with is UWM, and they're based out of Pontiac, Michigan. So I'm going to take a flight out there on Tuesday night.
Great.
Out to
Great.
Detroit, Michigan. So, but yeah, it's just how they were really rebuilding the Detroit area is just, you know.
Oh, it's amazing what's happened in Detroit. And thank goodness, right? Because Detroit really had fallen on hard times. And
Yes.
that was a great place to be a real estate investor for many years also. So, yeah, you're right. There's good things going on in Detroit.
Yeah, but
We didn't think to look in Detroit. We had focused on Akron, Savannah, and Alabama when we were looking at other markets outside of New Jersey. But Detroit is a good one as
Yes,
well.
Detroit, yes.
Yeah.
Yeah, they're really...
And also, I would point out, Birmingham is just a 2-hour drive from the Atlanta airport, too.
Oh, really?
2 hours.
Yeah.
Oh, wow.
Yeah.
Good to know.
Yep.
Yeah, that is good to
Yeah.
know.
I mean, it's easier for me to go to Birmingham because my partner's there. I don't have to rent a car.
Yeah,
you know, I'm just
absolutely.
driving around with him, and I wouldn't want him to drive to Atlanta to pick me up. So, yeah.
So when you go down there periodically, you're saying like every 8 to
Like
12?
every 8 to 10 weeks. Yeah. And I usually will go on a Wednesday night and come home on either Saturday night or Sunday morning.
Okay.
Yeah.
All right. And you just visiting your properties or what
Visiting
is it?
properties, you know, relationship building, right? That's a big part of it.
Okay.
You know, meeting with the people at Section 8. We actually try to go to some meetups while we're there, try to meet up with some attorneys while we're there, try to meet some contractors while we're there, all of that. You know, it's generally a pretty packed couple of days, but it's all good. It's like the business is doing well, and you know, like I said, we've got 11 properties now. We hope to have a lot more
Right.
going forward. So if anybody wants to find out more about it, please feel free to reach out to me. I'd be happy to tell you about it. There we go. Okay, we've got Rick on board.
Now, back to my question earlier. Now, you were talking about building relationships with folks that are in charge of the Section 8 department out there.
Yep.
How did you come about that? Like, how did you how'd you come about that? Like, how
Well, you know, we start. So Birmingham is, a city that has seen some hard times and is starting to come out of those hard
Right.
times. The city's putting a lot of effort into their infrastructure and really building up the downtown area. And so as we kind of thought of different ways to create housing, we started realizing that Section 8, because of the income levels of many people in Birmingham is a good way to go. So, we had decided, we're going to go, and my partner and I both, very much believe in, relationships are very important. So we said, we're going to reach out to Section 8. We're going to connect with somebody there. We're going to go to the office. And we're going to sit down with people, right? And so we were reaching out to the people at the Section 8 office, like anything else. It was taking a little bit of work to get somebody to be willing to sit down and talk with us. And one day we said, you know what, let's just go down to the office. We'll ask for this woman that we've been trying to meet with and see if we can meet her while we're there. And just, fortunately, there was a brand new person who was running the office. I think it may have been his second day there. And we just, he was willing to meet with us, and we just really hit it off. And now we're in touch with him on a regular basis. And he's been fantastic.
It's fantastic.
Yeah.
So do you have another project in mind outside of, I should say another state, or is it going to be Alabama for
I
a
don't
while?
know if I can handle
Okay.
another state at this
Okay.
point anyway.
So right now it's New Jersey and
New
Alabama?
Jersey and Alabama, and
Okay.
specifically Birmingham, Alabama.
Okay.
So, yeah.
Okay.
Yeah.
Sounds good.
I mean, I like the idea of the Gulf Coast of Alabama to explore one day. I'm not ready for that.
Is that Gulf Shores?
There's Gulf Shore. It's Mobile is the big city, and then there's
Okay.
Gulf Shores and Orange Beach are
Okay.
on the Gulf Coast of Alabama. And I'd like to think maybe one day that can be an area
Yes.
to explore as well. I'm not there yet,
Mm-hmm.
but I think it's really important to be open, to all of these opportunities, and when they arise, just be like, okay, like we were talking the other day on the phone, Rick, about kind of just jumping right in, 2 feet,
Seizing the day.
Yeah, exactly.
All right. Well, we want to thank you for coming and,
Thank you.
joining us for
Thank
our
you.
first podcast.
I know it's short
It was
notice,
really
but yeah.
fun.
But
No,
thank
it
you so
wasn't.
much.
No, it was really fun. I really appreciate it, and it sounds like you guys are doing great work. And I'm so encouraged to hear this recent project in Jersey City. Like the two of you and this realtor just sound like a great team. So
Yes.
good for you.
Okay.
And thanks for having me. It was a lot of
All right.
fun.
Okay. Thank you very much.
All right.
Thank
Okay.
you.
Have a
Have
good one.
night.
Me too.